All righty. Good morning, everyone. This is your host, Shawn Blount Jr. with the Major Leaders Podcast. Major Leaders is a platform in which we have in depth conversations with industry professionals in their respective fields. And I have a very special guest. This individual right here, I've had the privilege of speaking. Well, actually, now it's been a few years now that we've been working together, and probably one of my favorite relationships in the real estate industry, and also an important position that she holds, not just for myself, but for many others. But I want to get straight into it. Today's specific topic, very important. We're going to be talking about initiatives that are going to help home buyers here in today's market. And I'm talking specifically in 2025. So it's going to be very good to listen in on this, take some notes. I think you'll enjoy it. But today's guest is going to be Michelle Phillips. She is with Tidewater Home Funding, and she's a senior mortgage advisor over there. But also, out of one of many names that I think she holds, she's someone who is very thorough in her work. She takes pride in working with everyone, but specifically with first-time home buyers and every specific loan type. And not to mention, Michelle does a good job at that every week, just about. I know I receive at least a few emails from her, just different updates, changes that are coming with the market. And, as a consumer, or even as an agent, it's extremely important to receive those updates so you can constantly stay ahead of the times. But without further ado, I'm going to go ahead and bring Michelle into the chat here. Michelle, how are you?
I'm doing well. Thank you for that great introduction.
Oh, no problem at all. It's the least that I can do. Another thing, too, Michelle is not only a great partner to work with, she's very, very thorough in her work. She does pretty much anything possible with helping your clients or as the consumer. She does everything. I mean, I remember there was one situation in particular for a client. Originally, the buyer had qualified for a specific amount of grants, and we were excited and working it into the loan, into the contract. But then right before the end, there was another grant opportunity that just came up, and she was able to scramble around and also give them some additional funds. So that's just one of the things that it's good to know that you have someone on your team that's working for you, even when the contract is still in process. So just one of the smaller things. But we're going to get into it. And like I said, this specific topic is actually a really good one here. And Michelle, how are you this morning?
I'm doing good.
Doing pretty good. That's good to hear. Okay. But I want to just start with just a little bit about yourself, your background. And so, what has inspired you to become a loan officer? I mean, it's definitely a field that I think is not only extremely important, but it takes a certain kind of person to really get into to become a loan officer. So, what inspired you to become a loan officer?
Well, my answer is going to make me sound somewhat like a nerd, but my inspiration was the combination of my love for math and the desire to help people. So I absolutely love to help all people. My passion is a first time home buyer. The reason is because they are so excited about the process and they want to learn every detail that there is to learn. And I love to explain those details, what you're getting into, why you're qualifying for one type of loan but not another. And I'm also looking for, as you mentioned, any grant opportunities that someone could qualify for. And so if you do qualify, I tell you why you do. But if you don't, I also give you that reason too, because you should be given every opportunity for every type of loan and all grants to see if you do or do not qualify for them. But that's pretty much why I got into it, because of people and math.
Mm. And what do you enjoy most about your role in the real estate process?
Just being able to be that piece of information to explain what is happening, because a lot of times, even if it's your first time or your second time, sometimes you're just not the expert like you need to be. And so that's why they're going to rely on myself, they're going to rely on you, because we are experts in our fields. I've been doing this for 23 years. Not saying that I know everything, because every day is new, and sometimes there's a new opportunity that you can learn, which is great because that makes our fields exciting every single day. There are some things that are going to stay constant, but there are other things that you better jump on that train and ride it because it's going to be going fast.
Mm, I know that's right. I know that is right. I want to touch on market trends, and once again, probably one of my favorite topics because it's something that I'm seeing it from one lens as a real estate professional, but you're seeing it from both lenses, and I think that's another important thing to take a look at for market trends currently. Have you seen the mortgage industry evolve over the years, and what kind of trends have you been seeing?
Well, it definitely changes. It feels like a roller coaster ride sometimes. Sometimes, you're just riding the constant roller coaster, and then all of a sudden, here comes the uphill, and then you're coming down. So it's a constant ride. But here are just some things that I'm seeing as far as market trends, and I have about 7 of them I want to talk to you about. So the first thing are renovation loans. They seem to be on the uprise right now because you have a lot of properties that are being listed that might need a little TLC. They might be older homes that either someone just hasn't had the time or money to update, or someone who's lived in that home for 30, 40, 50 years, and now they're moving on to their next phase in their life.
Mm,
So a renovation loan is something that a buyer can do. So you need to go in and look at the house with an open mind. See, kind of like the HGTV. You're going to come in and you're going to look at it, and you might see some wallpaper on the walls, which, believe it or not, is actually coming back. You might see some shag carpet. You might see an outdated kitchen, but think of it as to what do you want it to be. So the renovation loans are able to help you to fix up the home, and you can do this work even prior to moving in. And then once the work is complete, you have the home of your dreams without having to spend as much money as a new construction home. Or maybe a new construction home has neighbors closer by than you want, or not in the area that you want it to be. So that's the nice thing about a older home is you can make it what you want to be. I kind of say it's kind of like putting lipstick on a pig.
mm,
So the property may not be pretty in the beginning, but it could be the home of your dreams with just a little bit of work.
wow.
Another market trend that I'm seeing is trigger leads. And we're trying to work really hard on getting these eliminated. But did you know that if a mortgage professional pulls your credit, your information is being sold from the credit bureaus to other mortgage companies? So if you've ever applied for any credit previously and you've given your email address, your phone number, that's how these credit bureaus are selling your information to other mortgage companies who are paying for it. And so I could pull credit for someone and they might not get any phone calls. But within about 20, 30 minutes of me pulling it, some people receive 50 to 60 phone calls in a day. They could be phone calls, they could be text messages, they could be emails. But it's at no fault of the mortgage company that's originally pulling that credit report because obviously we're not wanting all these people to reach out to you and call you. But that's just something that's happening right now that we're trying to get a hold of, trying to get that so that you're not getting those phone calls and texts that are unsolicited because you're reaching out to the individuals that you want to talk to. And some of them are being really slick and they're uh, texting you or calling you and pretending like you have already talked to them. So just know that your information needs to be guarded and you're only talking to the people that you want to. So your social security number is only known by you and you are only to give it out to the people that you fully trust.
Mm. Now, I have a
Another,
question for you
mhm,
on that
sure.
as well. Now, I know oftentimes, and are you familiar with the Do Not Call Registry or the
Yes.
DNC, just for short? Now, is that something different than that? That it's a separate entity that will help with the trigger leads, or
So after I pull credit, if the borrower starts to get these phone calls, I do send them a link where you can opt out. You do have to put in your information, and it takes about 24 to 48 hours for those calls to stop. So each when you put your information on a do not call list, uh, the mortgage industry might be different than something else that you put it under. So you just have to make sure that you have filled that information out to stop those calls from coming in.
Good.
Another trend is regarding credit reports. So, believe it or not, since 2019, the cost of credit reports has gone up 400%.
Mm.
So, it's really a burden on the consumers and the lenders alike, because if a lender, as a lender, we're trying to keep our costs down because you're comparing, a borrower is comparing us to other lenders. Um, and when we pull these credit reports, we are billed from the credit agency that we pull them from, and it's a bill that we pay. So it's not like we're making money off of pulling a credit report. But for something that's just getting your tri-merge scores, your three scores from the different credit bureaus, finding out the debts that you owe, it shouldn't cost as much as it does. And a credit report now costs about $120.
Mm.
So again, I've been doing this for 23 years. When I first started out, credit reports cost about $13. So that tells you the difference. $13 to now $120. But the good news is when you get your credit pulled, it's good for 4 months. So you would not have to have it repulled again. Chances are you would find a home in that 4 months and be able to close without having to have another cost of an additional credit report. Another market trend that we're seeing and talking about rates increasing is homeowners insurance. Homeowners insurance prices are surging. And, look at all the natural disasters that have been happening around us lately
Right.
in North Carolina, Tennessee, now out in California. But with the increase of these homeowners insurance rates, that is decreasing the buyer's buying power, unfortunately. So, in other words, the higher that the premiums are, then you have to scale back on your purchase price because you have to keep yourself within a certain debt to income ratio. So you just have to make sure that you don't exceed that. So when we're pre-qualifying a borrower, I'm giving them what I estimate that homeowner's insurance price to be. It is included in your monthly payment, so there shouldn't be any surprises. They can shop for whoever they want for that homeowner's insurance. But if for any reason the quotes just seem out of line, because I see them all the time, I also give them other people in the industry that they could potentially get those quotes from just to see and compare to their original quote. Another trend is cash. We always hear that cash is king. But of all the home purchases that are happening right now, 30% of them are being purchased with cash.
Mm.
It doesn't matter if a sales price is 200,000 or if it is $1 million. We are seeing cash all over the place. So what that means to a buyer is if you're writing a contract on a home and there is an offer for cash, somebody might take that offer because they can close quickly. You don't have to go through the loan process. You don't have to worry about if something's going to happen at the end. So that is a certain challenge right now. But I've also been on the other end of somebody putting in an offer on a home and there was a cash offer and they decided to go with the loan of my borrowers instead of taking a cash offer. So it just is kind of the luck of the draw if they're going to accept your offer or if they're going to take cash. Another trend, we're going to talk about some technology advancements right now that, if you're deciding to purchase a home and you go onto a website of a mortgage company, and if they have a platform where they can give you a rapid mortgage approval, some people like having that decision right off the bat. However, I'm going to say that you're dealing with a computer. It doesn't give you any explanation as to what you're approved for or what's going to happen in the process. It's not telling you the information about the loan. You're kind of going into it blindly. And, computers are great in some aspects, but in other instances, they're not. I'm a firm believer that local is best. I work for a local lender. We've been in business this month for 25 years, and we're a smaller company. So sometimes, small fish in a big pond, but that's where I've chosen. I've always worked for Tidewater Home Funding. I've never worked anywhere else. And I'm a firm believer of having a company where if I have a situation and there's something wrong with the loan, I can reach out to an underwriter that's right under my same roof. I can work if there's something going on with the closing package. My closers are all right under my roof. My processor, who's my right hand person that's helping me through this process if there's any hiccups, is right there. Um, and we have a great president of our company that if we have something, if we call there's a little bit of hair on the loan and we're trying to figure out what's going on with it, my underwriter, myself, my president, we all get into one room and we figure out how to make it happen because we don't like no for an answer. And so you might not have that if you're just hitting these bigger national companies where you're clicking a button to see what you're approved for, and if it gets down to the ninth or 10th hour and all of a sudden they're telling you you don't qualify for the loan, who do you talk to? So it's a good thing to be able to talk to someone local, be able to pick up your phone and call them. Shawn will tell you, I answer the phone in the evenings. I'm
Mhm.
talking to you on the weekends. So I'm not just a 9 to 5 person, and neither is Shawn. It's the nature of the business. If all of a sudden you see a house that comes on the market, and it's a Friday evening, you don't need to wait till Monday to talk to somebody because chances are the house is gone. So make sure that you are talking to somebody locally and not just a computer. And then the last trend I'm going to talk to you about is increased regulatory scrutiny. All mortgage companies are put under this scrutiny, and we're all having to put policies into place to protect the buyer. We're staying up to date on all the changes related to the lending practices and making sure that all of the borrower's data is remaining private. So we're protecting the consumer in a crucial situation where things are running smoothly. We're looking out for you. We're making sure that your information is, not being stolen or used in any particular way. All of these uh, thieves, for lack of a better word, are getting really good at what they do. And so we have to protect a borrower at all times. But those are just some of the trends that I'm seeing in the market currently.
Mm. Those are wonderful. Really, really good. Thank you for sharing that. Okay, I want to touch on some common misconceptions because, especially I know with working specifically with first-time home buyers, right? The process is new. It's not like buying a car, or it's not like or any other big purchases. This is, and for most people, the largest investment they're going to ever make, right? So you want to be sure that they have the right people around them who are providing them with the right information to move through the process successfully. So, what are some common misconceptions about obtaining a mortgage that you often encounter from some of these purchasers?
Well, a big misconception is that you have to have 20% for a down payment to purchase a home. And that is not true. If you are a first time home buyer, there are loans available as long as your income qualifies for your household that you only have to put down 1% of whatever a sales price is. And then you could get a grant for the remaining portion. So let's say that if you're purchasing 225,000, then your down payment is $2,250, and you get a grant for the rest of that 2 to 2.5% of the down payment. If you're not a first time home buyer, but your income still meets criteria, this is new and the last time escapes me, but let's say 8 to 12 months. Um, so if you're not a first time home buyer, your income qualifies, but you don't have the down payment, you could potentially finance your down payment into a small second mortgage. So a 3% down payment or 3.5% down payment, which will help. But even if you don't qualify for those, down payments are minimum 3 to 3.5%. And then we just look for mortgage insurance to fill that gap. It's part of your monthly payment, but it's based on your credit score, your debt to income ratio. So if you don't have a 20% down payment, mortgage insurance could be $30 to $50 a month, which is very minimal, and it would save you from having that large down payment. And of course, if you are a veteran in the military, a VA buyer, there's never a down payment. So That's always a great loan if someone qualifies for. But having down payment money is always a big misconception. Not saying that you don't have to have some money in the bank, because it does cost to do a transaction, but it could be pretty minimal.
Mm, that is really good. And with these conversations, how do you go about it? How do you address to those clients about that? Because obviously, okay, yes, there could be some opportunities that are available for them to come out of pocket with less money, but how do you go about those conversations? I think everybody has those differently.
So, if for some reason a borrower does not have the money that they need currently to purchase a home, I'm going to talk to them about, this is what you qualify for, and here's a good ballpark of what you need to do to save up. So, right now is a great time of year to start talking about that, because come February, March, April, it's tax return money time. So a lot of people get tax refunds, and if you don't go out and blow it on something or take a vacation, then that's money that you could use for a down payment if you need it, or for closing costs if a seller's not willing to pay it, or if your debt to income ratio is a little too high, you could take that money and pay off a debt that's needed to help you to qualify. So, if this is the year that you think you're wanting to purchase a home, start talking to somebody now, because your tax refund's coming, and now's the time to make those dreams a reality.
Mm, awesome. Thank you for sharing that. Okay. Next, I want to touch on advice for buyers. Okay. So, what are some advice that you would give to first time home buyers, or any buyers that are looking to navigate through the loan process successfully?
Once you've reached out to the realtor that you're looking to use, then the next step before you go look is talk to a mortgage loan officer. You need to get pre-qualified. You need to give the loan officer your information, have them run the numbers to see what you qualify for. Um, when I take a pre-qualification, I'm asking you, do you have a house in mind currently, or a sales price in mind? The next question I ask is, where do you want your monthly payment to be? Because you may qualify for 400,000, but your comfort level is at 300,000. You don't want to overextend yourself, which brings me to another point. Have a budget. Make sure you know where your money is going. Look at everything that you're spending. How many streaming services do you have? How many do you need? Do you leave the house every single morning and run through a Starbucks drive-through, which $10 to $15 at a pop? Or could you make your coffee at home and save the money? So just know where your money's going. Think about all of your debts, your cell phone bills, your electricity, and so you can do a budget with what your current um, budget is, and then you could look at where you want your payment to be and see, do you have that money uh, available for that mortgage payment? And you could also take month, 2 month, 3 months, and start putting that money aside so that you know that you could afford that mortgage payment. And make sure that you get pre qualified before you look at a house. You don't want to fall in love with something that you can't really afford. Um, that's like watching HDTV and seeing all the houses, and then going into reality and actually seeing houses.
Mhm.
HGTV sometimes is a big dream. It's not a reality. So just remember, it's TV. And also make sure that you are offered a grant. If you aren't, why aren't you being offered a grant? You need to be told that you do qualify or that you don't qualify. But if someone's not having that talk with you about a grant, then talk to someone else. You have the right to shop for a mortgage. When the first mortgage company pulls it, you have 30 days to shop that mortgage to make sure that what you're being offered is what you should be offered and what you're comfortable with.
That is great. That's really good information. Thank you for sharing that. Okay, now I want to touch on impact of interest rates. Interest rates are always going to be something that impacts the home buying process, and you are the one to have it firsthand, know that firsthand. So I wanted to ask, how does fluctuation in interest rates affect a buyer's decision, and what should they consider when rates are changing?
So, this is the biggest question we always get, because this is the one hot topic that everybody knows to talk about.
Mhm.
So, interest rates are ever changing. It's a roller coaster. Um, a lot of people don't realize that interest rates can come out in the morning, and in that time period of a day, they could change 7 or 8 times during the day. They do not remain constant. So let me talk to you a little bit. This is going to nerd out a little bit, but let me talk to you about interest rates. So mortgage rates are affected by market factors like inflation, the cost of borrowing money, bond yields, and risk. Mortgage rates are also affected by personal financial factors for a borrower. So, how much are you putting down for a down payment? What is your debt to income ratio? How much do you have in assets? What's your credit history? What is your credit score? All of those things are going to determine a rate. So, if I were to show up and go out tonight and run into some friends, the first thing they always ask me is, what are the rates doing? Well, it's hard to answer because if I have 5 people standing there, I could have 5 different rates depending on everybody's situation. So it's kind of like I tell them it's between here and here. But mortgage rates have thrown Americans for a wild ride in these last recent years. Of course, plunging to our record lows during the pandemic in 2020, and then nearly tripling to just over 8% in October of 2023. Since then, they've fallen and they're kind of on that roller coaster ride right now. But I would have to say that if I had to quote a rate right now, you're looking at somewhere between like 7.25 to, I'm sorry, 6.25 to about 7.25, depending on a person's situation. Good and bad economic news have an inverse impact on the direction of mortgage rates. Mortgage rates tend to increase when the national economy is robust and job growth is high. Um, it's partly a result of where investors decide to put their money. So, if they find more attractive returns elsewhere, then the bond market will need to increase, which means that the interest rates have to compete, and that will result in costlier rates for a borrower. A big misconception when you hear on the news that the Federal Reserve is getting ready to reduce the interest rates, it really doesn't set a mortgage rate. A lot of people think does, but it's not true. However, the Federal Reserve monetary policy decisions definitely influence them. So, if the Fed can raise or lower short term interest rates, that's going to indirectly affect a mortgage rate. But when the Fed raises the rates, it becomes more expensive for banks. It leads to borrowing lenders to borrow money, which translates to for you it's increased rates for a borrower. So when the Fed's rates lower, it becomes cheaper to borrow money, resulting in lower interest rates. So let's just talk about if somebody's looking at purchasing a home right now. With these fluctuation of rates, I have to run the numbers for that person every single time before they put in an offer. Because let's say if their max is 320,000, but all of a sudden there's a 0.5% increase in an interest rate. Now, if their max was 320, now their max might be 300 with that change in an interest rate. So it's kind of like putting on your seatbelt and riding that roller coaster because it's definitely changing. It's ever changing. It's not a fun part of the job because a lot of times, if someone's talked to me and I tell them, "Here's what the rate looks like," then they're out looking for a home, and 2 months later they decide they found something, and now the rates are a half to 3/4 of a point higher. They're wondering, okay, you know, is she lying to me? I don't understand. So you just have to know that the economy is a lot of things in the economy is going to drive these rates. So with uncertain times right now, it's kind of the name of the game.
That is really good. Okay. Now I want to touch on now collaborating with brokers or the real estate professionals. And whenever I sit down or buy a consultation with a client, I use different verbiage to kind of help them understand the process that they're getting ready to go into. So a lot of the words I'm going to use is team, teamwork, trust, accountability. Some of those keywords that just lets the consumer know that there's a team in place that's going to be there to help assist you through the process. And who you decide to use for this team is going to be a pivotal role in how the transaction can go, your process can go. And just keep in mind, at minimum, we're looking at a transaction once you find a home is roughly going to be at least 30 days to close on the process. So you want to be comfortable with the people that you're working with. But with that being said, how can real estate professionals and loan officers work together to have a more efficient service for these clients?
Well, in the beginning, you were talking about how I work with borrowers. So I'm going to turn this on how Shawn works with a client. Um, Shawn is fantastic when he is working with his clients. He's listening to what they say, he's asking the right questions, and he's taking them to find what they are looking for. You're not just, if somebody says they're qualified for 250, you're not looking and saying, okay, here's a $250,000 house, we're going to go look at it. You're making sure it's meeting their criteria and their family size currently or what their family size is going to be down the road. So you have to have someone who's going to listen and not just do what they want to do. But the best real estate team, and I love to use the word team too because we are absolutely uh, in this together, is a real estate agent and a loan officer who work together. So that's why I say if you're going on these computers and you're just getting anybody, these people or computers that are talking to you don't know our area. You need to have someone who actually services this area, who lives in this area, who grew up in this area. Um, because they're going to know if you say a certain area that you want, Shawn's going to know where that area is. So we each have an independent job. A real estate agent is the one that's going to help you find the home. They're going to get you pre qualified and see what you qualify for and get you in the door to be able to see that home. And they're going to walk you through the steps of the contract negotiations, the home inspection negotiations, everything that goes along with the real estate part of it. And I am not an expert in that part, which is why I rely on Shawn, because that's his expertise. Where I come in as a loan officer, I'm going to tell you, I'm going to take your pre qualification. I'm going to tell you all the loan programs that you do or do not qualify for, all the grants that you do or do not qualify for. I'm going to run the numbers and let you know your down payment, your estimated payment, and your closing cost. And I'm going to let you know that before you sign a dotted line with a contract. You want to know what you're getting into before you sign a contract, and you're like, that's not where I wanted my payment to be. What now? What am I going to do? So, if your team works together effectively, this is going to be a seamless process, and that's what you want to happen is a seamless process. Now, I'm not going to say that every loan goes off without a hitch, because um, you know, there in a home inspection there could be something that comes up that you weren't expecting. But with Shawn's expertise, he's going to negotiate that and get that seller to see that if they want to sell the house, this is what needs to be done, and hopefully that they agree to that. Um, or if something happens to come up in the loan process and there's a debt that we didn't discuss that didn't show up on the credit report, but we see it on your bank account, and we didn't realize that that was an additional debt. You know, we're going to talk about how do we get through this process to make that happen. So a team is very important in this process for sure.
Mm. And one thing that I always try to remind myself in these conversations is what you exactly said is everyone has their role, right? I have my role as a real estate professional. Michelle has her role as the loan officer. Stay in our we stay in our lanes, right? And she said where she's an expert, her expertise lies, mine does not, and vice versa. So that's why we rely on each other to ensure that we do our job to make the process seamless. So thank you for sharing that. It's very important. Okay, and towards the end, you touched on some of those situations where things don't always um, go as smooth and dandy as possible. Although we try to make it that way, but things happen. But we work to create those solutions. So I wanted to ask you, with overcoming challenges, would you mind sharing a particular story or scenario that you've had where you had to overcome a loan hiccup or something that was close to not going through?
I could probably write a book on this subject alone. Um, every loan has something, almost always, whether it's the house again or it's the loan itself. And sometimes it's a big surprise to everybody, and sometimes it's not a surprise because um, some borrowers like to hide things and like to see if you can find them. So it's always best to give your full situation, answer the questions a loan officer is asking you so that you're not hiding anything, because we just don't need any surprises. um, I've had people in the middle of the process. This was actually a husband and a wife. I had a husband get fired from his job, and I had a wife quit her job and didn't bother to tell me about either during the process. And we found out because of we're going to verify your employment. Um, I've had people who have purchased a car during the process that now they no longer qualify for the loan. Don't ever make any large purchases during this transaction. A transaction usually lasts 30 to 45 days. You can hold off on doing any crazy things during that time. Um, but the one that sticks with my mind had to do with the grant process. You can get multiple grants and you can stack them all on top of one another. And depending on the type of income that a borrower receives, grant sources could look at income differently. So, in this particular situation, I had a borrower who received per diem income. And per diem income is not used as income to qualify on a loan because there are certain things that the per diem income goes to pay for. It could pay for your rent, it could pay for the food that you eat during the day, it could pay for your gas to get to work. So this particular borrower received $28,000 in per diem income for the year, which is a lot. But if I'm not counting it towards income, I have to look at the grant sources. So some grant sources look at income differently. So I was getting two different grants. One was a closing cost grant, and when that income or grant source looked at the borrower's income, they did not uh, count the per diem income. So she qualified for the closing cost grant. But VHDA, which is Virginia Housing Development Authority, they at the in during the process, they wait for a mortgage company to get an approval on the loan, and then at the end of the process, you send the loan up to their underwriters, and they're going to look at things and they're going to review the income to see if they agree with our underwriters. And in this particular situation, VHDA decided to count the per diem income. So then this borrower lost their grant for the down payment. So the borrower was putting down 1% and getting a grant for the other 2.5%. So that's a huge chunk of money now that the borrower has to come up with. Luckily, the band aid, so to speak, for this situation is the VHDA also allows you to finance your full down payment into a small second mortgage. So we were able to do that, but we were towards the end of the process. And unfortunately, when you add a second mortgage, that's a changed circumstance. And so the closing got delayed about a week because you can't close once you've added a second mortgage. There's a certain time frame that you have to wait. But the good news is the loan got done. And the grant source that came through for the closing cost, I feel, was the bigger grant that was needed. That was like $12,500. And the grant that was lost was the down payment, which was semi minimal compared to closing costs. So we could have been in a much worse situation, but luckily there was a solution to the problem, which is what we always try to look for first. Sometimes there may not be a solution, but of course we're going to do everything that we can to try to make that solution be found.
Wow. And I think that's the most important right there, to be working with someone in any field, not just in real estate or in person at home, but any field, someone who is solution based, right? So oftentimes in life you're going to come across these obstacles, or what appear as obstacles. And it's a matter of, are you able to take a moment and try to figure out the solution, or ask some questions to get to the solution. And that's exactly what Michelle does extremely well. And every time you tell a story like this, or even with some of our personal transactions, I'm just amazed of of how you're able to work some things together, and more importantly, it gives me the continued motivation to continue to look for those solutions, and and how I go about business as well. So that's extremely important right there. Absolutely. Okay, you touched on this at the beginning, but I do want to dive in a little bit more with the technology aspect of it. And you touched on how a lot of times now you have borrowers who are, or buyers who are looking online and they're doing applications solely online, and feeling very confident about it, right? And you had advised to actually speak to someone that, if possibly local, who knows not only the area but also able to possibly give you some better terms, or it just feels better. Also, I think with working with someone local, someone that you can actually go to their office and speak to, as opposed to some of these bigger chains. But what role does technology play in the mortgage industry today? And how do you see it changing the loan process in the future?
So I'm just going to talk about like the one of the big topics now, which is artificial intelligence. It's changing the mortgage industry. It's telling a borrower what they will qualify for, what documents are needed for underwriting. It's even got chat boxes for support. But again, I'm going to tell you, it does not take the place of having a real live person to talk to, someone that you're answering the questions for, someone that you're sharing your fears with about going into this process. Um, what if an artificial intelligence tells you qualify for 350,000, but you really are more comfortable with 300,000? You just don't want to get yourself into a situation that you're overextending yourself. Um, Artificial intelligence is affecting people not getting the service that they deserve. I am a big advocate for customer service. I am treating people the way that I want to be treated. I am working with professionals that I want to work with. And I am referring people, if they don't have an agent, I am referring them to agents that I would personally use myself. I'm never going to put someone into a situation where um, I don't know how this other person works, because this is a lot of money to spend, a loan to take out at one time. If you think about, you're uh, applying for a credit card, it's $1,000, $2,000. You're buying a car, it's 20, 30, 40,000. When you're buying a house, it's 200, 300, $400,000 all at once. So the biggest transaction of your life, why are you going to take it into the hands of someone that is not local, that you're not, um, someone who's not living here, working here, raising their family here? I'm just a big advocate of customer service, local, and doing the deals with people that you would trust yourself.
Mm. And you know what, to that point, and so yeah, we're all getting, I guess, normal. It's starting to be normalized. You know, a lot of the artificial intelligence, AIs, things like that now, but it still does not take away the trust that still is missing, right? So you're giving all of these confidential information to, in some cases, not even a secured site or a portal, and that's risk there. But still, not even having the conversation until after all the documents are submitted. But it's always good to at least get on the phone with somebody, get a feel for who the person is that you're getting ready to do business with, so that you can feel comfortable about moving forward. And that's the only thing I think, especially with real estate transaction, that will take a while for people to really understand the importance of having someone live to speak to you about a lot of that process there. So that's important.
Absolutely.
Okay, want to touch on some regulatory changes. So, how do recent regulatory changes impact borrowers in the lending process?
Well, in the lending process, we are all required to be compliant. So we have to check all the information that is provided to us by a borrower. We are verifying where you've lived for the last 2 years, where you've worked for the last 2 years. How if you tell us how much money that you're making, we have to verify that with your employer. We verify your social security number that you give us, that it actually belongs to you, that your banking information is correct. Any deposits that go into your bank account that are not from your payroll have to be documented. Where is
Mm,
this money coming from? And if it can't be documented, then it can't be used. Please know that a mortgage company does not like cash. You always hear cash is king. However, if you can't document cash, then it really can't be used. So we call it mattress money. If you've got that money
Mm.
underneath your mattress, then keep it there. Or if you plan on using it for the transaction, then you need to deposit that well in advance so that we're not seeing that deposit that is going in. We're looking for any mortgage fraud. Mortgage fraud is huge. Has someone doctored their W 2s? Have they doctored their pay stubs? Anything that is altered, we're looking to make sure that, you know, everybody's telling the truth and the documents that they're providing are true and accurate. Um, you want to provide proving that you are who you say you are and not someone using someone else's information to purchase a home. That's a thing called straw buying. So you just have to make sure that everything that you're saying is true and accurate, and not that we don't believe you, but we have to prove that you are who you say you are, and all this information does belong to you.
Mm. That is really good. And you touched on one thing that I think comes up more often nowadays is outside funds, right? So someone you have a conversation with somebody and they say, "Hey, I'm going to be receiving money from my uncle or my grandparents or whoever it may be," and you stated the mattress money. How long does that money have to be seasoned in an account for you to actually count that, or for you to feel comfortable about those funds?
Well, if you're making deposits into your bank account, it's typically 60 days that it needs to be in there before we're going to see it, because we're asking for 2 months of bank statements. So have it deposited prior to the 60 days. Uh, Gift funds, if you're receiving a gift from a family member, those things are fine. But you need to talk to your mortgage loan officer first before you do anything and accept any money from anyone, because there is a process. Things do have to be tracked. And On certain types of loans, if a family member is giving you a gift, they have to provide a bank statement to show that they do have the funds to provide. If a family member is not willing to do that because they feel like they're quote unquote not a part of the transaction, then you can't accept that money, because the government highly regulates mortgage industries and it does have to be tracked. So just make sure that if you are making any deposits, you're making any large purchases, anything that could mess up a mortgage transaction, just talk it through with the mortgage professional first before you do anything that could, wreck your dreams and then not be able to buy the house.
For those for that as well, is there a requirement for whoever the person is that you're getting the gift from to have it in an account prior
Yes,
to, or
yes, that they can't take cash under their bed and deposit it into an account. It already has to be in an asset account that can be tracked. So we would have to show, like again, certain types of loans, we have to get a bank statement from them to show where they have the money and then where the money was transferred to the borrower.
Hmm, absolutely perfect. Alrighty. So you touched on a situation where a few situations where you've been able to create solutions. I want to touch on some now success stories, and if you wouldn't mind sharing a specific story where you you made a significant impact in somebody's process. Maybe they were working with a loan officer prior, and it just things didn't work out. Then they came over to Michelle and Tidewater Home Funding and just got the whole a la carte um, presentation rollout. So yeah, what's a success story that you've had in your years in business?
Well, I do have people who have talked to someone else first and been told one thing or another, and decided that's not the answer that they wanted, and they've come to me. Now, there are some times where what someone has been told is true, but it doesn't hurt to get a second opinion. And there are other times where someone's been told something where it wasn't true. So, like I said, just make sure that you're talking to the right people, getting the right answers. But my success story for 2024 was that I was able to help 17 different borrowers uh, to receive closing cost grants.
Mm.
And those grants were anywhere between $12,500 to $15,000 for closing costs. What that means to a buyer is it's going to help them win a contract, because you're not going to have to ask for closing costs from the seller. So put yourself in a position, if you own the home right now and you were selling it to a borrower, or to a client, which contract would you want to accept? The one who's asking you for closing costs, or the one where you don't have to pay anything and then you're going to pocket more money. So that's putting borrowers in a leg up situation that they're not having to ask for closing cost money. I've also been able to combine those closing cost grants with other grants, down payment grants, and various grants from different cities. Do you know that if your income qualifies, depending on the city that you want to live in, I can get you grants anywhere between $25,000 to $60,000, depending on the city. And that's down payment money that you don't have to come up with. So if you can combine the down payment money with the closing cost grants, um, that's more money that you have down the road for uh, whatever your mortgage payment costs. You already have 3 or 4 months in advance in your bank account that you can fall back on if something were to happen. Um, so all of this has helped buyers who otherwise might have been priced out of the market to be able to qualify for a loan. Like I said, I love helping people. Not everybody's going to qualify for a grant. I don't just do first-time home buyer loans. I do it all. But whatever somebody brings to me, I'm going to figure out the puzzle and tell you where you fit and what you qualify for.
That's amazing. That is amazing. Okay, we're getting closer to wrap up. This has been amazing, Michelle. I want to once again thank you for the time and sharing this information, especially where we are the first quarter of 2025. It's good to people to hear this information while it's fresh, and for those who are really looking to purchase in these next couple months down the line. So this is really really good. Thank you. Okay, advice for brokers. I want to talk to some of my fellow real estate professionals out there. What tips would you give real estate brokers to help them better support their clients in securing financing while staying within their lane? That's extremely important.
And that's one of the things I was going to say. Shawn's already doing it. You're partnering with mortgage loan officers who are experts in their field, who are able to help the buyers. So having the partnerships is, you know, of the utmost importance. But making sure that you're working with someone who can do all types of lending. There are VA loans, there are conventional loans, there's FHA loans, there's USDA loans. We have some rural areas around here that you might qualify. The property might qualify for USDA, the borrower's income might qualify, and then you don't have to have a down payment. So, do you really have to have a down payment, or do you qualify for programs where you don't have to? Those are big things to know. Um, are you getting offered a first-time home buyer loan? Are you qualifying for the grants? Let's talk about a borrower who doesn't fit into a perfect box. If you have self employed borrowers, somebody who's having a hard time qualifying because when they file their taxes, they're showing a loss for their income. Well, there's other loans out there. There's what we call non QM loans. They're loans for borrowers who don't fit into that perfect box. Self employed borrowers that if you don't qualify on your tax returns, well, let's look at your bank statements. Look at the deposits that are going in from your income, and that's what you can use to average and figure out if you qualify. So, like I said, if you're getting an answer of no somewhere, maybe somebody else has something to offer that one company didn't. So it doesn't hurt to look around and see what is the best fit and opportunity for you. And then the other thing is, if I'm talking to somebody right now, and let's say that their credit score isn't where it needs to be, or their debts are a little too high. Well, let me give you a plan of what you need to do to get your credit score to where it needs to be, or you need the plan of A, B, and C. You need to save a little bit of money. This is what you need to do to get your credit score up, and this is going to put you in a better situation, and it's going to take 30 days. It's going to take 45 days, might take 6 months. I've worked with somebody before. The longest I've worked with somebody is 5 years. They had to work on their credit. They had to save their money, but they listened and they did everything I said. And in 5 years' time, they were able to qualify and buy that house. So, I mean, hard work and perseverance does pay off. So, don't if now is not the time and no is the answer for now, it doesn't mean that it can't change in the future.
Wow, 5 years. I think yeah, that's I haven't had one that long. That is
Yeah.
that's amazing. I'm sure you still keep in touch with that family. I'm sure that's someone you
Yeah,
all talk about
I do.
often.
Yep, I do hear from people, and the funny thing is, I've been doing this so long now that now I'm starting to hear from people's kids,
Mm,
people's grandkids. So it is nice to know that if you do good work for somebody, that they're going to keep referring you the business, which is what's kept me in this business for 23 years. You know, this is not an easy business. Um, when
right.
people are, you know, again, the TV is going to show you something on the HGTV, whatever it's going to show you, but we are 100% commission. So we don't get a paycheck until we close a loan. And so sometimes our hard work doesn't always pay off because somebody decides not to purchase, or it's just not the right time. But other times it does pay off. And when you are getting referrals from your past clients, that's when you know that you're doing the job that you should be doing.
100%. Couldn't agree more. Absolutely. Okay. So as we conclude, I want to open up some questions. It'll be some rapid fire questions, get to know you a little bit. First question, Michelle, what is your favorite book?
So I have a couple different genres, but if I had to pick one, it would be The Notebook by Nicholas
Mm,
Sparks. And some of you may have seen that because they turned it into a movie. I read it before it was a movie, but it's a very touching story. But if I were to pick up a book today, I love to read thrillers, like CSI kind of stuff,
okay.
or historical fiction.
Mm, okay. It's amazing there. What's your favorite movie?
So I have two. I prefer to watch funny movies, but I absolutely love Christmas Vacation. I know it's silly, but I do like that movie. But if I had to pick like a drama action filled, I like the Bourne series, Jason Bourne with Matt
Oh,
Dillon.
okay. That's a good one.
Yeah.
That's a really good one. Okay. What's a quote or a model that you live by currently?
Find ways to step out of your comfort zone. Focus on excitement rather than fear.
Say that one more time.
Find ways to step out of your comfort zone. Focus on excitement rather than fear.
Mm, I
So
like
when
that.
Shawn, when Shawn asked me to sit here and record this and do this with you, who likes to get up and talk in front of a camera? Not very many people. It's not something I do every day, but sometimes you just have to say yes and and turn it into excitement. So that's what we're doing today.
I like that. I like that. Okay. And if you could share one piece of financial advice to first time home buyers, what would it be? I know we've shared a lot, but what would that one advice be?
So I heard something recently that really made me think. Um, so it's not how much money you make, it's how much debt you owe. So I had a borrower who made like $40,000, and he qualified for a $250,000 house because he had very little debt. So when you're thinking about your debts, we all need a car. We have to get from point A to point B. Does it have to be the most expensive or best car? The answer to that is no. Um, when you have credit cards, do you need two or three credit cards that are all maxed out? The answer to that is no. Start living within your means. Start working on your debts, because you don't have to, like I said, you don't have to make a lot of money. As long as you don't have a lot of debts, then your house is your debt, your car is your debt. And those are the things that you have to have. Those are necessities. So just, watch what you spend.
Hmm, that's always good. And also, even for myself or anybody who's listening, I mean, consistently, often, right? Something that you can look at or adjust your spending and savings plan as often as you need to, right? So that's always something to get familiar and comfortable with looking at.
And I do have a spending plan that I can share with a borrower when they contact if they need a copy of it, that they can fill it out. Some loans require you to fill that out as a first time home buyer, depending on credit scores and things. But I do have a copy of it that I'd be glad to share if you just want to start focusing and looking at where you're spending your money. Because a lot of times, you know, these things are automatically coming out of your accounts and you're not really thinking about them when they're automatic. So you need to look at it. It touches on everything from your groceries to your car payments to your cell phone bills. It even has like laundromat on there. Some people don't do that anymore, but
Mm,
uh, It has things like uh, lottery tickets, bingo games, um, your coffee. It makes you think of everything that you're spending. And sometimes, like I said, you don't realize how much you're spending. But when I get these bank statements and I see where people are spending their money, you know, we live in a society where you can do whatever you want whenever you want, and but do you want to make money? And as fast as you make it, all your money's gone right after you pay your bills, and there's nothing left to get you till the next paycheck. So just be thinking about your budget, because if a priority for you is buying a house, then that's a conversation you need to have with yourself.
Mm, that is really great. Really great. Okay. And then lastly, for us for today, what is the most rewarding part of being a loan officer?
For me, it is purely helping people. I love being able to answer questions and see the smiles on their face. And the biggest part for us as a team is getting to that closing table and celebrating together. I do show up at the closing with Shawn,
Mhm.
and we're able to
Yes,
celebrate and take pictures and talk about when you're going to move in and all your dreams and your aspirations. So that's a big part, is just being able to participate in the celebration.
absolutely. Well, Michelle, that is all that I have. I want to once again thank you for coming on to the Major Leaders podcast. And I hope that the information that you shared today will help a lot of people who are out there considering being in the market, whether it be a year from now or 2 years from now, that they have been able to grasp something that will help them to move forward in their process. But other than that, I want to thank you. And yeah, that's all I have.
Perfect. Thank you. I appreciate the opportunity.
All right. All right. You have a good one.
You too.